What up, guys? I hope everybody's doing well. I know I haven't made a video for about a week. I literally have like chronic back pain. I had this chair I was sitting in trading for years. It was an executive chair. It broke, and I was sitting in this like kitchen table chair for like a week while I was waiting on a new one to show up, and my back just started hurting. Market started going sideways, a lot of fear. I really don't want to make a lot of alerts or get too involved in this chaos over here. So didn't really make a lot of alerts, started watching a show, and normally I don't like lay on the couch and watch shows and TV because I'm always doing YouTubes and trading, but sometimes the market just doesn't want to do anything until the next data point comes out. And because Bullard and Mester came out and struck a little fear in the market saying, hey, 0.5 instead of 0.25, which the market thought because of what Jay Powell had previously said, which still probably stands, it created a lot of fear. And there's a lot of behavioral oscillations, emotional oscillations going on. The fact that the Dow is a leading indicator and can't get above this line and is retesting the primary, that's not good. I mean, that's definitely not good. And Bitcoin had a similar thing. In fact, a lot of things had a lot of rejection points. So didn't really want to make a lot of videos telling you what you already know, but I do want to remind you that I want to show you the key levels so that you have a plan. I want to talk to you about a plan and also show you the pivots as it's Sunday and we're starting to see some pivots on the hourly with the green light strategy on a lot of cryptos. So understanding the ranges and understanding the pivots are great for trades, and the more volatility, the more uncertainty, the more chaos theory, lower the time frame. So I'm going to show you the pivots, okay, and we're getting some of those on crypto in the hourly. But in my last video, I went through these three zones: the discount, the equilibrium, and the premium. And the way oscillations work is they usually will bounce off the discount and they will oscillate off the equilibrium, or they'll break off the equilibrium and bounce off the premium back down to the equilibrium. There's an amount of energy, kinetic energy, and the distance between the secular trend and the peak is the mass, and the period is time, and that just depends on the oscillations. But the green lights will show the oscillations going up and down and up and down through it, okay? And that's different than the four phases. So later in the video, I'm going to show you more about the zones. I'm going to show you a whole bunch of range trades, from the top or the premium and the discount, and why the oscillation will usually come up and come back down to the equilibrium, and then it'll go up further and then it'll bounce off of this area, which will then become the discount, and then fail at the equilibrium, then break through the equilibrium. And I'll just show you how these oscillations work, and a lot of it has to do with behavior, emotion, FOMO, momentum, but identifying the pivots and the three zones are important. And typically, it's very hard to explain without getting into a lot of physics and trigonometry about chaos theory. Imagine a butterfly flaps its wings in California. Will that create a tornado in Texas? Okay, so you don't have infinite structures, infinite weather patterns, infinite amount of meteors and rocks in space, infinite amount of atoms that you can calculate. So there's always going to be a form of chaos, but there is a way to understand the cycles and the chaos and break them apart, even though they intersect, via a strategy, these three zones, and understanding the energy of the mass and how it will come back to the equilibrium. So I'm going to try to make it not too confusing, but in the end, just pay attention to the ranges, and I'll try to explain it the best I can, okay? So yeah, the Dow, this rejection point, not good. You're getting a pink lights on the daily, that's not good. Sentiment is definitely coming down. If you think a little bit past what everybody is saying on TV and what the obvious fear is, which is, you know, a 0.5, but really, I mean, people are erratic. People overreact. We were just talking about a full percent not long ago. We were just at 9% inflation not long ago. We have come a long way, okay? Markets are going to oscillate. They're going to be erratic. Markets are random. It is chaotic. People are on different continents, different trading platforms, different sentiments, different news pieces, different time zones, different time frames, different indicators. Traders will expand the volume, they will contract the volume. Okay, if everybody just bought low and held, the market would just slow and steady move up. Markets don't work like that. Even in super sick bull runs, it's choppy. Okay? Even in really cool bull runs, it's choppy. And even in some of these blue candles, it's hiking a sheet, it's showing momentum. There's down days in there, you know. But overall secular uptrend in the cycle lets you be comfortable for holding. Now, you're definitely higher than you were, but you are at a key level, so you do need to heed some caution. Same thing, you know, with the SPY. I mean, look, we broke out of this key level right here. So yeah, you had this pivot high, and then you kind of have this one here, and we broke out and kind of failed. So, you know, it's possible they're going to test the primary. It's possible that for 3 weeks or 2.5 weeks now, until we get the new data set, that, you know, markets are going to be a little touch and go. Okay. And that's the thing about phase one. It's really bumpy because there's more risk in phase one because there's still uncertainty. And as things get more certain, more people come into the market. A lot of whales who bought crypto or Microsoft's, Apple's, they bought low, okay? And they're waiting on key level breakouts to probably scale in on that position and buy more. So, you know, it might just be touch and go for a few weeks, but if you have a plan and you know what you want as far as a goal, you're gonna be okay. You just have to monitor and have trade management and know what those goals are and the conviction in the plan. Okay, so for me, it might be a little confusing for you guys on this channel because some of you might just invest and some of you might just swing trade and some of you might just day trade. I do it all. I scalp, I day trade, I swing trade, I position trade, I invest. I do it all. So when I invest, I'm looking to buy low, which I did, and that's why I'm not worried about my investment hodl stuff in these behavioral oscillations or market chaos theory phenomena, okay? Because I understand that in phase one it's bumpy, and I understand behavioral economics and behavioral finance, and so I understand that emotional oscillations will happen and that the oscillations tend to be caused by behavioral fear. And the fear of 0.5% versus 0.25%, I mean, people really have a short memory. We were just above 9%. But here's one of the things that they're not saying on the news that I do want to remind you about, that I do think that smart money is considering, and it's something that we should talk about. Now, when Jay Powell comes out and he's like, look, things are looking good. GDP is probably going to go up in 2023. That's really good that he said that. And he said, yeah, we're, you know, maybe quarter point a couple times, maybe a pause. You know, that starts circulating. People like that. And then Bullard and Mester come out and say 0.5%. The same time, you wake up in the morning last week and Biden's in Kyiv. And it starts bringing back memories of the omnibus, 1.7, trillion or something, right? Spending that hasn't hit the inflation. So when they talk about speed wobbles and speed bumps and possibly it going up and down, but overall down,
the answer lies in oscillations.
Okay, just like I was talking about, a secular uptrend has these, it's bumpy on the way to the top, just like the pink lights. It's up, it's below, it's up, it's below, it's up, it's below, it's up, it's below. If you were looking at physics, between the mean and the top is the mass, okay? And usually the amount of inertia in the mass or the energy creates the oscillation and an equal amount coming down. But in a downtrend, there's always going to be more down than up, more down than up, more down than up. And in an uptrend, there's going to be more up than down. these oscillations will go above and below the mean, which this thing is calculating for you in the uptrend and the downtrend, okay?
Or more specifically, it has to do with simple harmonic motion, where oscillations follow a particular consistent pattern. But physicists often describe simple harmonic motion in terms of a ball attached to a horizontal spring lying on a table. While it's lying there at rest, it's in equilibrium. And when you move the ball so that it stretches the spring, then let go, the ball keeps moving back and forth forever. In a frictionless world. That back and forth motion caused by the force of the spring is simple harmonic motion. Now, we want to know two things about this oscillating ball. What kinds of energy does it have? And what's its maximum velocity? To better understand what's happening to the ball, let's start with its energy. As the ball compresses and stretches the spring, both kinetic energy and potential energy come into play. Kinetic energy is the energy of motion, and as the ball moves, there are 2 points. The turning points where it's not moving. One point is where the spring is compressed all the way, and the other is where it's stretched all the way. And the distance between either of these 2 points and the equilibrium point is called the amplitude. At those 2 turning points, the ball won't have any kinetic energy since it isn't moving. Instead, all of the ball's energy will be potential energy from the spring, half of the spring constant times the amplitude squared. Now, as the ball moves towards the middle, its kinetic energy starts to increase because it's moving faster and faster, and at the same time, its potential energy decreases, keeping its total energy the same. And exactly in the middle of the ball's motion, at the equilibrium point, its potential energy goes down to 0. The ball is back where it started, so the spring is no longer pulling on it. Its kinetic energy, on the other hand, has reached its maximum, which means that at that point, the total energy of the ball will be equal to half of its mass times its maximum velocity squared.
Now, let's go take a look at some pivots here real quick and see kind of what's popping here. So let's go to the hourlies. And, you know, for me, I have all this stuff memorized. I know where the prices were a week ago, a month ago on crypto. And so I know the ranges and the gaps pretty well myself. And I know you can ride Aave from 80 to 90, 80 to 90, 80 to 90, 80 to 90. I know that you can go with GRT and you can buy at 14.5 cents, and it recently went to 23 cents. You put 10 grand on that thing at 14.5 cents and like a 20x leverage into momentum. Just go look at GRT so you can see what I'm saying. Solana is another one. Buy at 21.50, sell at 25. Buy at 21.50, sell at 25. Over and over. Traders are going to expand the volume. They're going to contract the volume, okay? I don't know where GRT is. Oh, it's up at the top. Okay, so let's see. Down here, yep, 14. It got as low as 0.141, but the green lights went off and that went blue, and there's your triangle. So you bought this candle at 14.5 cents, just like I said. And then recently, you got up here at 23, a little over. Well, they've all been this way, okay? And these oscillations, looking at the hourly, like here's the daily. Okay, it's oscillating, okay? But if you notice, the candles are getting smaller, right? And this is getting closer to the price action. So it's, you know, probably going to be turning soon. Well, it has to turn on the hourly first. So it's the weekend when I'm recording this. We just had the worst week of 23 prior to this. So if you know your ranges and you're a sniper and you're a hunter, you're looking for that trade. And if you're leverage trading into momentum, you know, I like to just get into like one at a time, and, you know, definitely, you know, the hourly or the 5 minutes cool. The more the volatility in the market, the lower the time frame. I really like being down here on the 5 minute, you know, like grabbing something like this. You can really see where the momentum changes, boom. And then when it'll populate on the chart, there you go. So it goes green, there's a blue, there's a green triangle, you buy right there. Look how close you are to the bottom. You buy right there and you just kind of hold it. Now, you can get out right here if you want. The difference between where you bought here and there, it's about a penny and a half. Well, a penny and a half with 20x leverage and a lot, you know, 100,000 tokens, it's gonna pay fat, trust me. And you can kind of, you know, yeah, you lost a little bit. You're never gonna sell right at the top with these strategies, okay? You're gonna buy pretty close to the bottom. You're gonna sell pretty close to the top, okay? You're gonna choose your time frame based on volatility of the environment. However, there's no reason you can't just do this all year long on a 5-minute or an hour or a 4-hour or a daily if you want. On the daily, you can get rocked pretty hard. That's why I only do the daily right now in phase 1 for the high conviction hodl stuff that's in the green lights. Other than that, I'm really trading on the hourlies myself. But yeah, know your ranges and know where these things can go. If it's super volatile, jump down to the 5-minute. But the 1 hour is a real good pivot point. Remember, getting above that 200 is really good. It just adds to the probability of a longer run going long when you're above the 200, just like the probability is higher that it's going to go down longer when you're below it, okay? And just like this is an average to the mean, the 200, so is this green lights. It's just a little bit different. The 200, well, the 200 has a lot of purposes, but one is understanding where you're at in the 4 phases, whereas the green lights kind of keeps you on track for the average to the mean in the cycles, the oscillations in the secular uptrend or downtrend. Don't want to get too confusing here, but basically you're pivoting. You got the green lights, you got kind of a new uptrend starting. Cycles don't begin and end, and they are influenced by other cycles, and some of those cycles go up and down, and A touches B and they intersect with C. It's complex. That's why it's called market cycle chaos theory phenomena.
The idea has since captured the public imagination with butterfly effect, now shorthand for chaos theory. Chaos theory is the idea that tiny changes in initial conditions will escalate into much bigger differences in the future. When something is highly sensitive to subtle changes in its trajectory, its future state will become very difficult to predict, even with the most powerful computers on the planet. Even these two simple pendulums are sensitive to tiny differences in their starting positions. Initially, they follow a similar path, but soon enough, their paths significantly diverge.
I did make a video on that. I think it's a little too complex for YouTube. Not saying that you can't understand it, but I don't think that I explained it. I explained it in a very physics type of way, and it might just be over people's heads. It's just best to just know if this is green, it's going to go above and below. But if it stays green, you're just in a cycle, okay? And a lot of times when they oscillate, it's due to behavioral emotions and erratic behavior. But the oscillations, they're normal, and they're going to be here forever. They always have been, they always will be, and they will be not just in the mark down phase or phase 4 or the bear phase, but in phase 1, the accumulation phase, in phase 2, the participation phase, in phase 3, the distribution phase. It's always bumpy, guys. It's always bumpy. That's why you got to have a plan. If you don't have a plan, your plan is to fail, okay? For me, I'm trying to have about 20 in my hodl between crypto and stocks, and I already have them, and I'm already up on all of them. And then I'm just using everything else to trade, and I really like doing it on the hourly because a lot of times if you're on the hourly, you'd be surprised when this thing first starts going green, it could get shaky and you could go down in money, even if you bought, they're both blue. Let's say you buy up in here. I mean, this goes down a little bit, but if you give it time and you trust it, the momentum, it always goes in that favor. Now, tomorrow's Monday. Who knows? Because you can never predict the macro, and that is why macro strategy is incredibly difficult to predict. Knowing that, and knowing that there's chaos and randomness, and that's how markets are made up, all you have to do is have something to help you get in and get out, and then not be emotional, robotically buy it and sell it, manage the trade, okay? You got to monitor these trades, if you're trading. If you're doing the green lights or the 5 to 9, then on the daily, then you can basically just check it out daily and do that kind of thing. But If you're going to be trading on the 5-minute or VWAP trading or whatever, range trading, you're going to have to sit here and monitor it. I mean, that's the name of the game. Look at Dash. Dash was just up here at like 77, I think? Yeah, almost 78 actually. And look, just getting momentum. That's another thing about momentum I want to explain. So you never want to buy the dip. You want to wait for the momentum to change. So Dash is an example. We'll just look at it. So it goes green here, and then this is blue. So that's green. This is blue. You can wait for the green triangle. You can buy in there. Look how nasty it got. You lost money. That sucked. But it's still green, and the sentiment is showing that actually on-chain it's going. And if you notice, these are oscillations, and there will probably be another one, and it'll get up here, and it could reject and then finally break out. This is going to cut through the oscillations. Remember, the mass going up against the period, which, we don't know how long it's going to be on all the cycle oscillations in the secular uptrend. Sorry if it's getting a little confusing. Basically, don't buy the dip, buy the momentum. So another thing is, if you wanted to get out of something, and you're down, let's say you have a bunch of stuff and you're down 42% on one of them and you're down 2% on another, and you want to get out of both of them and you have some money on the side, the way to get out of them is to buy into momentum. But you don't buy the one that's 42% down, because the chances are in phase one, with all the chaos and behavioral erraticness, that 42%, even if you double down to 21% negative, you're probably not going to get out. However, if you're down 2 or 3% on the one that's barely red and you buy into momentum and you knock it down to 1%, the chances of it going 1% and getting out at even or up a little further and taking a gain are much more likely for you. So you want to understand these pivots and have a strategy. If you're down and you want to buy into it, buy the one that you're down the lowest on so that you can get out, okay? Just a little trick there. ApeCoin's another one you could range trade like a beast. I mean, this thing, I mean, it goes up here at $6.40 and it keeps coming down in this range at $4.91. And now here's the pivot. Boom. Okay. Goes blue. There's your green triangle. Now this one went green. So you come in here, it just kind of goes sideways and off we go. And it's gonna oscillate. And this green one's gonna cut through the oscillations, just like this one was. Here's the pink lights. It was above, and then it was below, and then it was above, and then it was below, and now it's above. But the pink to green is showing the pivot and the momentum, and because you're on the hourly, you've made enough strength through these shorter time frames. So yeah, for trading, you just need a system, a style, whatever. Solana, if you want it, I mean, this thing just keeps getting rejected. I mean, when it went up to 27, which is higher than it was going recently. Let me look at that real quick. So yeah, I was getting caught up here at that 25, 26 area. Yeah, it actually went to 27. So yeah, this is the range is starting to expand. And yeah, 2150, that's about right. And look, from 2150 back to 27, that's not a bad trade right there. If you want to just buy 4, 5, 600 tokens of these things and just sit here and monitor this trade, yeah, it can. One of the cool things about the green light strategy is not only is it estimating from all the exchanges and sentiment and stuff, but it also gets you in early and it gets you out with your gains earlier. And a lot of the other trading systems that have been taught, like traditional classic trading styles, they come in after. So when this happens, and I say momentum breeds momentum, if you enter right, other trading styles will, with the way they trade, will start to buy into that momentum as well. And that's why, again, just like behavioral will create an oscillation down, behavior and emotion will create an oscillation up. It creates energy and emotional, like FOMO, people call it. So, they're going to oscillate. But the main thing is are you trending up secularly? And if you are, then you just need to make a decision if you're trading or holding. Okay. Now, One Harmony is a really good trade, and I'm going to tell you why. Because it was just up here at 0.029, almost 3 cents, we'll call it, okay? And it's just pivoting right down here where it's at now at 0.21. Now, the difference between 0.021 cents and 0.03 cents doesn't sound like a lot, but you throw 10 grand on something that costs 2 pennies and you put 20x leverage on it into momentum, you're gonna get paid, baby. Trust me. Okay? Trade management, monitor that sucker, raise your stops accordingly, give it wiggle room, and don't over trade. You know, I have a problem with over trading. I tend to do that too. I'm working on it. It's work in progress. You got to always be learning. Remember, the day you stop learning is the day you start dying. I can see over here Stellar Lumens is starting to move up on my other screen, and I can see Bitcoin over here is trying to get to 23,600. So that's good. Now, I've been researching a lot about AI cryptos. In fact, I just heard an interview from Chamath.
You know, when I was at Facebook, my team and I were probably the first folks that really commercialized machine learning in the wild. You know, when our first versions of Newsfeed and some other technologies that you guys probably interact with every day essentially was about using machines to guess, and to guess better and better over time. So that's basically what this is, just on steroids. And you know, what ChatGPT shows you is just the amazing value in allowing computers to assist you in doing work. It's like a calculator replacing the abacus, replacing a pen and paper. What's important though is this Buffett quote. A friend of mine told me this yesterday, which I love. He told this story about refrigeration, and the story he tells is that the people and the person that invented refrigeration made some money, but most of the money was made by Coca-Cola, who used refrigeration to build an empire. And I view these large language models as refrigeration. Will there be some money made in it? I think so. But the Coca-Cola has yet to be built. And those are the companies that are really going to monetize it. And in order to monetize it well, here's a basic thing about machine learning that's worth knowing, which is if you take 1,000 of the same inputs and give it to Facebook and Microsoft and Google and Amazon, they'll all come up with the same machine learning model. But if you have one extra thing, one little ingredient that all of those other companies don't have, your output can be markedly different. It's like giving 2 great chefs 3 ingredients, but you give the 3rd chef 1 extra one. That person has the ability to do something very special.
So with something like ChatGPT, where it's data language modeling, many companies, Facebook, Microsoft, Google, they're going to use it. But the differentiator is what's going to make huge businesses from it. So right now I'm looking at a lot of AI companies and a lot of AI cryptos, because the next 10 years or so and more, but there's going to be a wild ride, and we're just at the very beginning of that ride. So Ocean, Deep Brain, GRT, Fetch, Singularity, there's a lot, actually. There's a lot. I have a whole, on CoinMarketCap, you can just search it, big data and AI, and I think there's like 190 or 200 or something like that. There's a lot of them. I've been looking into them. There's some cool ones, and definitely, you know, have some of that in your portfolio if you want. I personally do. I like to trade them too, because there's a lot of momentum going on with AI cryptos right now. Filecoin was just banging. Filecoin jumped huge up to $9.50, and you can get it for at $6.96. We're talking about, if you buy 1,000 of these things at $3, you're talking about $3,000. We're talking about 33% hit right off the momentum trade. Boom, and you're right in there like swimwear. Okay, boom, you buy it right here, and you're gonna try to get up here, and you're gonna throw some low leverage on it at the beginning of the momentum and add leverage as you go, as you're raising your stops, but you're gonna monitor it. You're gonna use trade management. One of the reasons I'm successful with trading is because I constantly am doing trade management, and I don't let the emotions get to me. I know what I'm doing for hodl. I know what I'm doing for swinging. I understand market environment and where I need to be on time frames and how to get myself in right, into momentum, and get myself out safely. I don't buy the bottom penny at the bottom, but I buy very, very close to the bottom because of these pivots and strategies, just like I sell close to the top. But I have to be sitting here watching. A lot of times I can watch on my phone. But that's kind of what you got to do. Now, we're at key levels of rejections. I mean, if you go look at Bitcoin, I mean, I showed you the Dow. Okay, so this area right here, this 25,180 or whatever, you're still in the green lights. This is an oscillation, bounce out the 200. Here's a rejection. Candles are getting smaller. You're still above the 200, okay? You didn't break the 200. You didn't break this pivot low yet. And you are in an oscillation, which does not look completely over to me. But that candle is getting smaller. I mean, we're just gonna have to see where it goes. What I don't want to see is this be a shoulder, head, shoulder, then a drop. Right when that omnibus money hits the inflation data. You know, services have not peaked, and services is a big part of the inflation. So we gotta watch real estate sectors. We gotta watch all the different sectors for, you know, supply and demand. So headline and core. Headline is supply and core is demand, if you didn't know. So, you know, also keep an eye on your dollar. The dollar's starting to get momentum on the daily above the 200. That's not good, okay? The VIX is starting to go up with the green lights. That's not good. While the Dow is getting the pink lights. That's also not good at key rejection levels. So that uncertainty shows up in the Dow because the Dow's a leading indicator. It doesn't know what to do because it can't catch a break. When the market starts getting happy, there's a guy named Bullard that comes out and makes sure it's not. Now, I tell you what, we fall below this blue line, which right now the wick went below, but the body's above. You know, it's not going to be good. We did it here and bounced right out. We fell in, double bottomed on the 200, broke out, fell back in, came out, broke out, went sideways, and now we're right on it. That I don't like, because what that's going to make me do is it's going to make me start altering my plan. I'm going to start saying, okay, I'm going to move some of those profits out. So when the next oscillation, when it goes up like it's doing right now, the next time it turns on the hourly, I'll probably just take profits and let it sit on the side, and I'll probably eventually just have a lot of money in trading on hourlies. And I love doing that with the Weeble, just trading with the price action above the 5 and 9, which is basically this cloud, and I like doing that. So look, we could be touch and go for like 3 more weeks here. It's going to be data dependent. It is bumpy in this area, but what can you do? You can range trade, you can buy into momentum, you can average down into your ones that are barely down so you can get out if that's what you want to do. You can get high flyers like not just AI crypto, but I mean, look at this Ocean. I mean, Ocean was just over here at 57 cents and it's at 40 cents. That's a 17-cent gain. Throw 5-10 grand at that sucker, get a lot of tokens, buy into momentum with some leverage on that. My Lord, it's gonna be, you know, it's gonna be a payout. But you gotta monitor this stuff. You can't just like walk away and, you know, fall asleep or whatever. You can't fall asleep at the wheel. You know, you gotta keep driving because sometimes you got to do manual override and you got to get out, you know. And, you know, like this guy said one time, I heard, you know, Mondays are always a good day to knock those traders over the head with a bat. So I'm very good at seeing patterns and structures and behaviors and I think kind of like a market maker. I think like a whale. And so I pick up on a lot of things that are engineered to create fear that doesn't create fear in me. It creates opportunity for me. because I see what's going on. I've been doing this, staring at these charts for so many darn years, that I just see opportunity, like Ocean. You get Ocean at 40 cents, it's going to go back to 57 cents. It will. You might be in the trade for a while, weeks, month, I don't know. Could be 3 days. But you want to do it when it's pivoting, and it is right at this very moment. So Engine's another one. This thing was just up at, it hit like 55 cents or something crazy, right? Yeah, almost 57 cents, and here you are at 40, almost 49. Look, bottom finder went off. Momentum's changing. You know, a 11 cent gain. Put some money in there. I mean, it's less than 50 cents a token. Put some money in there with some leverage and monitor it. Engine looks like it could do some work. Phantom's another one I've been keeping an eye on. Don't buy this dip. Buy the momentum and know where it was recently. So at 65 cents and you're getting at 46 cents into momentum, Phantom could be good. Ren is another one on my hit list that I've been watching. Ren has done some work lately. I was watching this whole thing over here to 14 cents. Just like a big wick goes down, guys, it might retest that big wick. When a big wick goes up, it's usually going to make it back to that level at some point. Somebody bought some Ren heavy. There's an institutional seller. There's the white, I don't know if you can see the white triangle. That white triangle is a top finder, and boom, look at the wick, nasty. So that's that's either somebody buying huge and just tons of take profits and stops, getting hit, like take profits is a better way to say that. Sorry. And then now, it oscillates down. It creates this whole like momentum to the downside, and finally it pivots, and it will make its way back up. So buying the bottom of the pivot, knowing the range, and like I was showing you, I like to range trade doing this thing where you're basically, you're looking at the discount zone, which is down here, and here's the equilibrium, which is in between here and here. So it's kind of like a VWAP, and here's the premium zone. So you're right off the discount. You're just now getting the Jedi green lights. You're just now pivoting and getting momentum, and it's a big gainer back up to the premium zone. So something to think about. Matic, it did break out. I mean, it did break out, and it came down, and now it's gonna have to do it again. But Matic's gonna be okay long term, and so are all the stocks and all the crypto. I mean, it's long term, it's going to be okay. You know why I know that? Because inflation is going down and more certainty is coming into the market. And as more certainty comes from the market, so do more participants and money. And as inflation goes down, the rate hiking starts to slow and then peak and then finally start coming down. And when rates come down, I mean, that's actually really going to pivot the market, and we're probably going to be entering into, a bullish phase 2 area. So it's good to go. Avalanche, I mean, buy that thing at 1750 and run it to 21 over and over. I mean, there you go. 1742, 2164. I mean, Avalanche is prime right now at 18. It's going to run up, and it's going to have a breakout, and it could get rejected here, it could break out. But I mean, these range trades are really good in this uncertain market. Gala, I mean, look, another pivot just beginning. So there's money to be made. ICP is one I really like. I'm looking to own ICP for the HODL, I think. I've been thinking about it a lot. So Aave, I like Aave too. Aave's good. But Aave, you can trade it and hold it. It's a good one. Ethereum's about 1600. It wasn't long ago, guys. It was down at like 1100 and then, 12, 13, 1400. So it's at 1633. I mean, it was just at 17 something. And it will be there and much further. Don't trip. 1743 it got to recently or so. About $100, $110. So yeah, guys, look, markets are random. Okay, there's oscillations, there's market cycle chaos theory phenomena. It's due to behavioral economics and behavioral finance. You cannot predict macro strategy. So when Bullard just spits out, hey, 0.5. You're going to have an erratic oscillation due to behavior. Use the fear to your advantage. It's the way of the Jedi. Have signals to buy in early, off pivots when momentum changes, and get out when momentum changes and take gains. So look, I'm going to leave it there. Let's have a good week out there. We'll see where it goes. We'll check in a couple days. My name is Chris, and welcome to the Wheelhouse.